Okay, dear students, Assalamu alaikum and good evening to everyone. Let's start our very first live revision class for the December session 2024. And today's topic, which we have already shared with everyone, that is basic income tax calculation. Basic income tax calculation. Okay, very important point. Obviously, we are studying Finance Act 2023. And this Finance Act 2023 is still valid for December 2024 attempt, and it is valid for March 2025 attempt. We always start our syllabus from individuals. So how an individual is going to pay tax in UK? Number one, every individual is not going to pay tax in UK. Only those individuals are required to pay tax in UK. Their income is more than the personal allowance. Personal allowance is 12,570. So obviously, whoever is having personal allowance more than 12,005, whoever is having income more than 12,570 will have to pay the tax. Now, an individual could have is going to have, let's say, might have number of sources of incomes. We need to learn how to pay tax if someone is earning from non-saving sources of income, if someone is having saving income, if someone is having dividend income. So how do we pay tax? Non-saving, saving income, and let's say dividend income. Basic rate band. Basic rate band actually starts from £1, goes till 37,700. Applicable tax rates are 20%, 20%, and for the dividend income, it is 8.75%. Higher rate starts from 37,701, goes till 1,25,140. Applicable tax rate is 40, 40, and 33.75%. Additional rate. Whoever is having income more than 1,25,141 plus above, then there's no limit. Applicable tax rate is 45%, 45%, and 39.35%. Okay. For saving income, there's a concept of nil rate band. There's a concept of nil rate. Now, what is this nil rate? Very simple. An individual, if an individual is a basic rate taxpayer, basic rate taxpayer, then individual gets nil rate of £1,000. If individual is a higher rate taxpayer, then nil rate is £500 for the saving income. If individual is an additional rate taxpayer, then there is no nil rate. So basically these nil rate bands, if someone is a basic rate taxpayer, then the nil rate band is £1,000. If someone is an higher rate taxpayer, then nil rate band is £500. If someone is an additional rate tax pair, then there is no nil rate band for the saving income. Okay. For saving income, we also have one concept. The name of the concept is starting rate band. Starting rate band from £1 till £5,000. Applicable tax rate is 0%. Okay. For dividend, there is only one nil rate band. Every individual, irrespective of tax paying status. In case of dividend income, every individual gets the nil rate band of £1,000 irrespective of tax paying status. Now, for example, let's say we have employment income, which is a non-saving income. Saving income simply means the interest income. And obviously, dividend income means dividend income. Assuming the employment income is 60,000. Saving income is 10,000. Dividend income is 5,000. This pay as you earn means when obviously individual is an employee, so normally what happens, they do pay tax in advance as well. Pay means pay as you earn, I'm just assuming the pay is 8,000. Required. Number one is income tax liability. The second is income tax payable. So students, we have employment income 60,000, saving income 10, dividend income 5, pay is 8. You need to calculate income tax liability and income tax payable. I'm giving 3 minutes to everyone. Please attempt this. Then obviously we are going to solve together as well. But I want you to attempt this, please. Students, any answer? First, we write non-saving income. Then saving income. Finally, dividend income and then total. Obviously, employment income is a non-saving income, which is 60,000. Saving income means interest income, which they have given us 10,000. Dividend income, they have given us 5,000. So obviously the total is 75,000. Personal allowance. The normal sequence of allocating the personal allowance is first non-saving, second saving, and the last one is the dividend income. Personal allowance 12,570. After deducting the personal allowance, we'll get taxable income. So simply 60,000 minus 12,570. Let's see, students, they are giving answers. Great. So taxable income is 47,430. 10,005. So 62,430. Now let's apply tax rate. Income tax. The normal sequence of applying the tax rate is very simple. Non-saving, saving, and then obviously dividend. Okay, results are coming. That's really nice. Income tax. So first we have to apply tax rate on non-saving. So non-saving income is 47,430. So simply non-saving. 37,700 into 20%. So 37,700 into 20%. 7,540. Now from 47,430 students, you need to deduct 37,700. Obviously, whatever comes, that obviously falls in higher rate band. Basic rate band we have fully utilized. Non-saving. So from 47,430 minus 37,700. 47,430 minus 37,700. I'm getting 9,730. Applicable tax rate is 40%. 3,892. Great. Now actually we have to move towards saving income. Now students, please, you need to learn very important concepts. Number one, whenever in the column of non-saving income, after deducting the personal allowance, if the taxable income is more than 5,000, repeat, in the column of non-saving, after deducting the personal allowance, if your taxable income is more than 5,000 or equal to 5,000, then starting rate band for the saving income will not apply. Simply, it is already utilized. It is already consumed. Repeat. Whenever in the column of non-saving, after deducting the personal allowance, your taxable income is either 5,000 or more than that. In that case, starting rate band concept will not apply on the saving income, number one. Number two. Now let's check for the nil rate band for the saving income. We know that when an individual is a basic rate taxpayer, applicable nil rate band is 1,000. When an individual is a higher rate taxpayer, applicable nil rate band is 500. In case of additional rate taxpayer, no nil rate band. Now, how do we decide the taxpayer status? Look at this. The last column, the total column. If you look at the last column, taxable income in the last column is more than 37,700. Taxable income in the last column is more than the basic rate band. And obviously it is less than the higher rate band. It is not exceeding higher rate band, but it has exceeded the basic rate band. So simply this individual is a higher rate taxpayer. So always the tax paying status is decided on the basis of last column. Total taxable income. So total taxable income is more than the basic rate band and it is less than the higher rate band. So simply it is not exceeding 1,25,140. So this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer will get nil rate band of 500. Saving income, nil rate band 500. Applicable tax rate is 0%. So from this 10,500 we have already taken in nil rate band. So remaining 9,500 obviously falls in higher rate band because basic rate band is already fully utilized. Saving income, higher rate, which is 40%. So 9,500 into this, I'm getting 3,800. Now dividend income. Can I say when it comes to dividend income, every individual gets nil rate band of 1,000 irrespective of the tax paying status. So simply dividend income, nil rate band, 1,000 into 0% is obviously 0. Then dividend income, remaining is 4,000. Higher rate band, applicable tax rate is 33.75%. So 4,000, I'm getting 1,350. Let's calculate income tax liability. 7,540 plus 3,892 plus 3,800 plus 1,350. Students, I'm getting 16,582. Less the tax which is already paid in advance, pay as you earn. And pay is 8,000. So here comes your income tax payable. I'm getting 8,582. So students, okay, that's great. Other students, they also have the same result. That's great to see that students are getting the same results. Good. Now, personal allowance allocation. The normal sequence of personal allowance allocation is non-saving, saving, and dividend income. So according to HMRC, the normal sequence of personal allowance allocation is number one, non-saving. If you still have personal allowance, go for saving, and the last you go for dividend income. But according to the HMRC, which is UK Taxation Authority, they have given you the permission. If you want, you can change the personal allowance allocation sequence, provided that the change in the personal allowance allocation will result in income tax saving. So it means there is one more possibility of personal allowance allocation. That is 1, 2, and obviously 3. Obviously, in majority of the cases, we follow the normal personal allowance allocation, but there's a possibility to change the personal allowance allocation sequence, provided that it should result in income tax saving. You should end up by paying less tax. Now the question, there's only one question: when do we need to change personal allowance allocation? It's very simple. Let's assume we are having employment income 8,000. Saving income is assuming 5,000. And let's say the dividend income is 20,000. I want everyone to simply calculate income tax liability. Just try to calculate income tax liability, then we'll be solving together as well. Okay, we got 2 different answers from different students. What about other one more answer? And then we'll discuss together. Students, you have the opportunity to attempt the question, so please do attempt. Now let's try. Non-saving, obviously saving, dividend income, and total. Non-saving is 8,000. Saving income is 5,000 and dividend income is 20. So total becomes 33,000. Personal allowance, obviously 8. Now, listen and listen carefully. Okay, there's third answer as well. Wow. So there are different answers. Let's solve it together. Taxable income. Now, please, student, look at the column of non-saving. In the non-saving column, taxable income is 0. taxable income is zero, it means the starting rate band of saving income is alive. It is applicable. It has not been consumed yet. So now you will get the starting rate band. Okay. And we know that, excuse me, in case of a starting rate band, applicable tax rate is only 0%. Now listen, entire 5,000 of the saving income, entire 5,000 of the saving income actually falls in starting rate band. Since the entire 5,000 falls in the starting rate band, so logically the applicable tax rate is already 0%. In that case, you are not supposed to deduct the remaining personal allowance from the saving income, because now if you are going to deduct the remaining personal allowance from the saving income, then logically, I would say you will be wasting your personal allowance. It will not result in any tax saving, because already entire 5,000 of the saving income is covered in the starting rate band, where applicable tax rate is 0%. So in that case, personal allowance sequence will change. And now 12,570 minus 8,000. Remaining personal allowance will be deducted from the dividend income, which is 4,570. So 20,000 minus 4,570. I'm getting 15,430. It is 20,430. Okay. Let's calculate now income tax. Obviously, entire 5,000 falls in starting rate band, saving income. Applicable tax rate is 0%. Okay, I'll repeat. Just let's complete this question first. Dividend income, we know that irrespective of individual's tax paying status, everyone gets nil rate band of 1,000. Nil rate band. Obviously, look at this total taxable income. It is far more less than 37,700. So it means that this individual is a basic rate taxpayer. And in case of basic rate taxpayer, applicable tax rate on dividend income is 8.75%. So dividend income, 15,430 minus 1,000 will give us 14,430. Applicable tax rate is 8.75%. $14,430 applicable tax rate is 0.875. Students, I'm getting 1,200 and 62.625, or make it 1,263. This is your income tax liability. When do we need to change the sequence of allocating the personal allowance? Simply, whenever number one, non-saving column is having, let's say, taxable income 0. Second, look at the amount. Obviously when taxable income is 0 in the column of non-saving, it means that a starting rate band is available. And now look at the amount of saving income. It is just 5,000. So obviously the entire 5,000 falls in a starting rate band, and where applicable tax rate is 0%. If you deduct the remaining personal allowance from here, so logically you will end up by paying more tax. Because deducting now the personal allowance from the saving income will not result in any tax saving. Why? Because entire 5,000 already falls in a starting rate band where applicable tax rate is 0%. In that case, personal allowance sequence changes, and now the remaining personal allowance will be deducted from the dividend income. So I hope it is now clear to everyone. Please quickly reply. When do we need to change the sequence of allocating the personal allowance? Okay, that's great. Okay, now. Personal pension scheme. A very simple example is personal pension scheme means like I'm talking about an insurance policy. So if an individual has taken the personal pension scheme, so what are the tax implications? What are the tax consequences? Before the discussion of any tax implication, let me tell you one thing. Whatever individual is contributing into personal pension scheme, that contribution is not the expense for that particular individual. If an individual has contributed into personal pension scheme, that contribution will not reduce the taxable income of that particular individual. It is not an expense. Let's say if XYZ individual is an employee has contributed into personal pension scheme. So that contribution will not reduce the employment income of that particular employee. But we know that when an employee contributes into occupational pension plan, then such contribution reduces employment income. So number one, whatever individual is contributing into personal pension scheme, that is not an expense. Now, what are the tax implications? Number one, in case of personal pension scheme, whatever individual contributes, it is treated as 80%. And logically, 20% is paid by HMRC. So whatever individual has contributed, it is treated as 80%. And 20% will be paid by HMRC. Second, basic rate. We know that the basic rate band limit is 37,700. In case of personal pension scheme contribution, basic rate band limit will increase by gross PPC. It's not only the basic rate band, it is also high rate, which is ends at 1,25,140. It will also increase by gross personal pension contribution. And whatever individual has contributed, nothing is mentioned. It is always treated as net. Net means 80%. And you have to make it gross. How do we make it gross? Simply whatever individual has contributed, nothing is mentioned. It is 80%. Multiply by 100 divided by 80 will make it gross personal pension contributions. And gross PPC will increase the limit of basic rate band, as well as gross PPC will increase the limit of high rate band. Okay. Third, adjusted net income. Actually, gross PPC also reduces the adjusted net income. How do we calculate adjusted net income? What is the importance of adjusted net income? Let me explain. Number one is net income. From this net income, we deduct gross personal pension contribution. We do deduct gross gift aid donation as well, and gross gift aid donation exactly works like gross PPC, but gross gift aid donation is not taxable in ATX. That is why I'm not writing here. So simply net income minus gross PPC will give you adjusted net income. Now, what is the importance of adjusted net income? If adjusted net income is equal to less than 100,000, then entire personal allowance 12,570 is available. Any individual who is having adjusted net income less than equal to 100,000 will get the entire personal allowance, which is 12,570. If adjusted net income exceeds 1 lakh, then personal allowance will reduce. In fact, if adjusted net income is more than equal to 1,25,140, then basically personal allowance becomes 0. Obviously, personal allowance cannot be negative. Either it will be positive or 0. Now, what is the formula of reduction of personal allowance? Personal allowance is 512,750 less adjusted net income if it is more than 1 lakh minus 100,000 into 1 upon 2. For example, if adjusted net income is 1,10,000, let's see how much personal allowance is available. Personal allowance is 12,570 less 1,10,000 minus 100,000 into 1 upon 2. Obviously 5,000. So how much personal allowance will be available? It will be 7,570. Question. Employment income is, let's say, 1,50,000. Personal pension contribution is 20,000 required. Income tax liability. Please, I want everyone. In fact, let me change this PPC. Just a minute. I want to change this PPC. Okay. Let's say the PPC is 40,000. Nothing is mentioned. I've already told you. Nothing is mentioned. Then PPC is treated as net, means 80%. In case of gross will be written in exam. I want everyone to calculate income tax liability. You have 3 minutes to attempt this question. Please do it. Okay, one student has answered 62,460. What about others? Others having 37,432. So different results are coming. What about one more student? Let's see. See, when I've given you the opportunity to attempt, so please do attempt the question. Anyone else wants to share the answer? Please go ahead. Anyone else? Okay, now let's solve together. Okay, one more answer is 48,000 and let's say 47 and 37,000. So let's try now. Number one, nothing is mentioned. As we have already discussed, nothing is mentioned. Then given PPC is net, you have to gross it up 100 upon 80. So that will give you 50,000. Okay. Employment income is 150, no more income. So it is the net income. 1,50,000 minus 50. It means adjusted net income is logically 1 lakh. Right? Can I say if an individual is having adjusted net income either 100,000 or less than that, then entire personal allowance is available. So employment income, which is obviously a non-saving income, Entire personal allowance is available because adjusted net income is 1 lakh. 12,570. Here comes the taxable income. So 1,50,000 minus 12,570. I'm getting 1,37,430. Income tax. Obviously, the basic as well as high rate band limits will increase. Basic rate band, basic rate, high rate. It is 37,700, 1,25,140. Gross PPC will increase both the limits, and gross PPC is 50,000. So 87,700. So 1,25,140 plus 50, I'm getting 1,75,140. Okay. So 87,700 into 20%. 17,540. From this 1,37,430 will deduct 87,700. Whatever comes, obviously that will fall in high rate band. And this individual is a high rate taxpayer. It is not an additional rate taxpayer because income is not exceeding 1,75,140. Because now due to gross PPC, this individual is having a high rate band limit 1,75,140. So simply 1,37,430 minus 87,700. So 1,37,430 minus 87,700. I'm getting 49,730 into 40%. So 19,892. 17,540. So students, obviously number of a student, they got the correct answer. That's great. 37,432. Income tax liability. And those students, they were not having the same answer. Please, you need to go back and revise again. Okay. I hope now it is clear to everyone. Since it is the first live revision class of December 2024 session, I don't want that to be very long. And usually I don't take long classes. Don't worry at all. Let me just highlight the topics of the revision, which we are going to discuss in the next class. Number one, we are going to discuss the topic of pension, in which we'll be discussing the pension allowance, each and everything. Second, we will be discussing exempt incomes relating to the obviously saving income. And relating to this pension, we will discuss the entire concept of annual allowance, which is 40,000. If it is unutilized, then what to do? If you have contributed more than the available limit of pension allowance, then what should be done? Plus, we will also discuss how an individual is going to get the pension funds. After the discussion of all these basic areas, and then we'll go towards, I would say, to a topic of property income. So, property income as well. So these are the topics which we are going to discuss in the next class. So always before the live revision class, I'm going to discuss, and before the class, I'll let you know the topics. Like right now, I'm telling you. And slowly and gradually, when we are going to discuss the kit questions, so before the discussion of the question, I will share the name and details of the question so that you should know in advance what are we going to discuss in the live revision class. As per commitment, in the live revision classes, you will get the revision of entire ATX. Entire means entire. So it is highly recommendable and advisable. Please do not miss the live classes. Obviously, the recording will be available, but if you have the opportunity to attend the live class, so why not? So that is all for today's live revision class, and do give the feedback of today's live revision class in your respective WhatsApp groups. And make sure every one of you should be having the study planner. If you don't have the study planner, please do ask the admin. They will share the study planner with you. So students, thank you very much. And please, let me repeat, do not miss the live revision class. These are very, very important. In the previous attempt, as you know that one student took first position in India with 92 marks, another student took first position in KSA. So I want to carry on with the same result. Majority of the live revision classes, as I mentioned earlier, they will be on Sunday. But after 1 week, we will increase, after one more week, we will increase the live revision classes. From one day, it will go to at least 2 days per week, or maybe 3. I think more or less the timing will be same. In case of any change, it will be mentioned in your WhatsApp group. So don't worry at all. So students, thank you very much for attending this live revision class. I hope that you have enjoyed today's class. Thank you very much.